Today, we're going to dive into a question that, let's be honest, is a pretty fun one to think about. You've just won a billion-dollar lottery. Now what? After that initial wave of pure shock, you are staring down a huge decision that will shape everything that comes next. And that is, should you claim your winnings using an LLC or a trust?
You know, that quote just hits the nail on the head, doesn't it? Winning is actually the easy part. The real trick is learning how to fly this new financial jet without immediately crashing and burning. And that's what this is all about. We're here to give you the flight manual.
All right, so here's our game plan. We'll kick things off with the billion-dollar problem itself. Then we'll look at your very first major choice, cash now or later. From there, we'll get into the anonymity game, pitting LLCs against trusts. We'll see how that plays out with two winners, two paths, uncover a really important 2026 tax twist, and finally lay out your winning strategy.
This video contains affiliate links. Before we break down the exact tax math for 2026, we need to talk about the very first move you must make when you hit the jackpot. Most people rush to claim a winning lottery ticket in their own personal name, or they get talked into a massively complicated and expensive trust. And that is exactly how you bleed out millions in unnecessary taxes and completely lose your privacy. If you want to maximize your tax savings and keep your identity hidden from the public, forming an LLC is often the smartest strategic move. An LLC provides pass-through taxation, meaning you avoid the crushing double taxation of other corporate structures and the highly compressed, rigid tax brackets that can trap certain trusts. Even better, in many states, a properly structured LLC allows you to claim your winnings completely anonymously, putting a legal shield between you, the media, and anyone looking for a handout. But you cannot cut corners on this. The entity has to be airtight. That is exactly where Busy comes in. If you decide the LLC route is your best play for those winnings, Busy handles your entire LLC formation for just $0 plus state fees. They take the guesswork completely out of the equation. They handle the articles of organization, secure your EIN, provide your registered agent service, and set up your compliance alerts. They build the exact legal fortress you need to claim that money safely and keep the IRS out of your pockets as much as legally possible. Do not leave your newfound wealth exposed. I've put a special link in the description below. Use that link to get your LLC set up properly through Busy today, and you'll also unlock some exclusive perks and discounts. Get that legal foundation handled first.
Okay, so before you start picking out colors for the new yacht, you've got to meet your new, not-so-silent partner in all this, the IRS. And trust me, the numbers we're about to see are just staggering. So just picture this. You see it everywhere, on the news, on billboards, a $1.5 billion jackpot. I mean, that feels like it could solve every problem you could ever imagine, right?
Well, hold on. Here's where reality starts to bite. See, if you take the cash lump sum, which pretty much every winner does, the prize isn't actually $1.5 billion. It's the present cash value. In our case, that's closer to $930 million, and we haven't even taken a single dollar out for taxes yet.
And this chart, this really lays out your immediate headache. The lottery is legally required to withhold 24% for federal taxes right off the top. That's over $223 million. Gone. Just like that. But here's the kicker. This kind of money instantly launches you into the absolute highest federal tax bracket, which is 37%. So you're left with this enormous gap, an extra $120.9 million that you still owe come tax season. Ouch. Now, that massive tax bill we just talked about, it's directly tied to the very first decision you're forced to make, and it's a big one.
So you got two main paths. You can take the lump sum. You get all that cash right now. Bam! But you get slammed with the highest possible tax rate on the whole thing, all at once. The trade-off? You're in complete control from day one. Or you can choose the annuity. You get paid in installments over 30 years. This spreads out your tax hit, which is nice, but you lose that immediate control. It's really a choice between control now versus stability over time.
Okay, so once you've picked your payout, the next critical question is how you're going to claim it. And this brings us right to the heart of the matter. LLC or trust? They might sound kind of similar, but they are built for completely different jobs. Let's start with the LLC, a limited liability company. The best way to think about this is as a business structure. It's like a suit of legal armor for your financial dealings. So, let's say you use your winnings to buy a real estate portfolio. If one of your businesses gets sued, the LLC is designed to protect your personal assets. It keeps things nice and separate.
A trust, on the other hand, is a totally different animal. It's an estate planning tool. It's not a business. It's more like a private, super detailed rulebook for your wealth. It lays out exactly who gets what, when, and how. And its primary mission is often about maintaining privacy and controlling your legacy.
And this table really drives home the key difference. Just look at how they're created. An LLC is a public filing with the state, which isn't always great if you're trying to stay under the radar. But a trust? That's a private legal document. This one detail is often why a trust is the go-to choice for winners whose #1 goal is just to stay anonymous.
So which one is actually better? Well, the real answer is it totally depends on what you want to do with the money. To really get a feel for it, let's imagine two very different winners with two very different goals.
Okay, so meet winner #1. We'll call her the entrepreneur. She's not the type to just let the money sit in a bank account. Nope. She wants to use this capital to build a real estate empire and launch new businesses. You know, the whole shebang.
For this winner, the LLC is an absolute no-brainer. It is the perfect vehicle. It creates that legal firewall between her business ventures and her personal wealth. So if one of her apartment buildings has a major problem and gets sued, the liability stops right there, protecting the rest of her fortune. It's an essential tool for anyone who's going to be actively putting their money to work.
Now for our second winner, the legacy builder. This person has a completely different mindset. They are terrified of the publicity, of the risks that come with sudden wealth. Their #1 priority is to protect the money, stay anonymous, and make sure their family is set up for generations to come.
For the legacy builder, a well-built, irrevocable trust is the hands-down winner. By putting the winnings into the trust, that money is no longer legally theirs, which offers incredible protection from future lawsuits or creditors. More importantly, the trust acts as that strict rulebook, preventing heirs from blowing through the money and ensuring their long-term security. It is all about privacy and preservation.
All right, now we have to talk about a huge strategic twist. For years, wealthy people have been planning around a major tax exemption deadline set for the end of 2025. But a new law change coming in 2026 completely removes that deadline, and it alters the entire game for legacy planning. And this timeline shows that shift perfectly. Before, the lifetime gift tax exemption of around $14 million was set to get sliced in half in 2026. This created a kind of use-it-or-lose-it frenzy to gift money away. But the new law makes that exemption permanent at an even higher $15 million. What's the takeaway? That urgent pressure is gone, giving lottery winners a lot more breathing room to plan their legacy thoughtfully.
So with all this info, what should a brand new winner actually do? The most crucial point is to move slowly and deliberately. Do not, I repeat, do not rush down to the lottery office.
Your first move isn't claiming the prize. It's hiring your personal board of directors. An experienced team will help you navigate your state's laws on anonymous claiming, analyze all the tax implications, and draft the legal documents that actually align with your vision for the future, whether that's building an empire or securing a quiet, lasting legacy. And ultimately, there is no single right answer here. The choice between an LLC and a trust isn't just a tax question, it's a life question. It forces you to decide what this incredible fortune is truly for. So, what would you build with it?